Hi guys, welcome back to my channel. Kelvin here. So with all the stock market crash, crypto market crash, lending platforms collapsing, there's actually one thing that's going to the moon. And no, I'm not talking about home loan interest rates, even though that is happening. Instead, it is Singapore Savings Bond or SSB. Just 6 months ago in January, the average yield was 1.78%, and now it has gone up to 3%. Wholesale. So in this video, I will explain the pros and cons of SSB. Should you apply for SSB? Some tips and tricks, and more importantly, a step-by-step guide on how to invest in SSB. But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a standing cat. Alright, let's start right now. So what is Singapore Savings Bond? If you watched the MAS introduction video on SSB, you may think that investing in it will allow you to what big and retire at the beach. Can is can, but you will need a few $1 million in the first place. Instead, SSB is basically like what the name says. It is a bond by the Singapore government to help you save money. So simple. Remember, save money, not what big. Okay, let me quickly show you how SSB works. Each SSB will last for 10 years. In the first year, it starts off at a lower interest, like 2%. Then, the longer you hold, the more interest that you will earn. That's how you get the 3% average interest. The interest will be paid out every 6 months. So, let's say if you apply for the August SSB, you will receive interest 6 months later in February, then 6 months later in August, and so on. Okay, even though SSB lasts for 10 years, if you need the money, you don't have to wait for 10 years to get back your money. Ain't nobody got time for that. Instead, you can withdraw anytime. And the best part, there's no penalty for withdrawing early. To withdraw, you can submit a withdrawal request anytime after 6 PM on the first business day of the month till 9 PM on the fourth last business day of the month. Then, you will get back your money plus any prorated interest by the second business day of the following month. Okay, let's talk about the pros and cons of SSB. Starting with the pros first. First, low risk. On their website, they say that SSB is fully backed by the Singapore government, and they promise that you can always get your investment amount back in full. Then you press X to doubt and be like, sure not, the government like to anyhow change things one. First, they go and change my CPF minimum sum, then they go and raise the GST, and also now they want to increase the retirement age. How I know they won't suddenly take my money like how they took my CPF? Okay, those are good points, but let's not talk about those. For SSB, you don't have to worry because the Singapore government has received AAA credit ratings from multiple agencies. Even your math exam also never got so many A's, right? Basically, Singapore government is confirmed to be super safe, so you don't have to worry about not getting your money back. But if Singapore gonna invaded, it's a totally different story, Second, SSB has a very high liquidity when you compare it to anything else that gives you risk-free return. CPF 5%? Oh, sorry lor, you will need to wait till you are 55 years old before you can withdraw. Fixed deposit? The interest is low, and if you withdraw early, there might be an early withdrawal fee. Cash management accounts? The returns are not guaranteed. You can actually lose money on them, When you compare all of them to SSB that gives a 3% average risk-free return and still lets you withdraw your money within 1 month without any penalty, SSB is clearly the winner here. As for the downside, there's only one: limited investment amount. You can own at most 200k in SSB, and on top of that, SSB is getting very popular now. If you check Google Trend, you can see that interest in SSB has gone up to the moon recently. Because everyone is losing money everywhere, and SSB is one of the few places left where you can still earn money. Because of how popular it is, in the last 2 months, SSB was actually oversubscribed, and each person could only get a limited amount. So you can't just sell house, sell wife, all into SSB, Quick pause, I want to talk about the sponsor of today's video, Webull. Webull is a new stockbroker that lets you trade stocks for a low fee of $0. They also have fractional shares, which lets you buy stock with even just $5 hongbao money. Right now, Webull has upgraded their latest sign-up promotion. If you sign up, deposit at least $2,000, then make 6 buy trades on either US stocks, ETFs, or options, you will receive up to $120 worth of Microsoft shares. This promotion ends on August 1st. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Check out this chart by investment modes. You can see that back in 2020, the 10-year yield were all below 1%. But since the beginning of this year, the rates have been going up and up. And going forward, as the US Fed plans to increase interest rates, we can expect SSB rates to go up even more. But how much more? Here's a fun fact. You can actually predict next month's SSB. That's because SSB rates is based on the previous Singapore government securities rates, which is also another bond by the Singapore government. They have a super duper complicated equation, but you don't need to know that. Instead, there's a much more simpler way. For this, I have to give credit to Punti. He shows that you can actually take the daily 10-year bond yield, then calculate the average to find out the next SSB interest rates. For example, if I calculate the average interest rate for June, I will end up with 3%, which is the current SSB average interest rates. Okay, here's how you can use this data. Maybe you want to apply for SSB this month to lock in the interest rates. But at the same time, you're thinking of waiting to see whether next month's rate is higher or not. What you can do is wait till the last day of application, then calculate the average interest rate to see if you can get a better rate next month or not. Then you just apply for whichever month is the highest. Okay, here's how to invest in SSB. First, you will need to be at least 18 years old. Otherwise, too bad, your level is not high enough. Then, you will need to apply for a CDB account. Usually, it will take about 10 business days to approve, which may sound long, but it's still faster than applying for passport, yeah? Then, you can apply for SSB either through DBS Paylah or OCBC or UOB, either through ATMs or internet banking. But I suggest to not use ATMs to apply. Later, you press long and the guy behind you not happy, yeah? So let me just quickly show you how to invest in SSB through internet banking. If you are using POSB, go to apply for more application services, then apply for Singapore government securities, choose SSB, next, then OK. Take note that you can apply using either cash or SRS, yeah? Fill in your details. As for amount, let's try 6969. Just kidding, you can only apply for a minimum of $500 to 200k in multiples of $500. For example, it can be $500, 1.5k, 2k, and so on, yeah? Let's try $500. Choose your account. Take note that there's a $2 fee whenever you apply. Once everything is okay, click next, check everything is alright, then submit. Now, you just have to wait for your result the following month. Then, if you are using UOB, it's also super easy. On the left side, go to investment, click IPO, bonds, T-bills, then under Singapore Savings Bond, click transact. Similarly, just fill in your info here. Finally, for OCBC, go to investments and insurance, click Singapore Government Securities, go to SSB, click buy, then fill in your stuff here. So that's how to invest in SSB. Now, let me share some tips and tricks with you. First, partial redemption. If you want to redeem your SSB early, you don't have to redeem everything. Instead, you can do a partial redemption. For example, maybe you invested 10k, but you can just redeem maybe 1k. However, take note, yeah, you can only redeem in multiples of $500. And whenever you redeem, there's a $2 transaction fee. Second, emergency fund. Because of how liquid SSB is, you can actually put some of your emergency savings in SSB. For example, maybe you have saved up to 6 months worth of emergency funds. Rather than letting that money sit in the bank, earning a set 0.5% interest, you can put 1 to 2 months worth of emergency funds into SSB to earn a higher interest. Now, of course, this doesn't apply to everyone, yeah? You still need to decide yourself whether this is a good idea based on your own situation, yeah? So those are some tips and tricks for SSB. But are you applying for SSB? Do comment down below and let me know. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.